Okay, let's look at our second category of long-term operating assets as it relates to impairments. So we're looking at the impairments or potential impairment of an indefinite life intangible asset. We have four things to look at: asset grouping, when to test, how to test, and what happens from this day forward. So we're going to continue with the Viva Enterprises illustration, except this time that radio broadcast license is renewable and management expects to renew it. And in this case, then the life is not finite as it was in the previous one. We have an indefinite life intangible asset. So it's the firm bought it and it carries it on its balance sheet for $780,000. There's no amortization over time for this one. In late 2018, the company noted substantial declines in the revenues from advertising. Okay, so first, asset grouping. That's already been done for us. We have just one radio broadcast license. So it is grouped, it is individual that we're going to look at. It has its own identifiable cash flows associated with it. The second part is when to test. Well, guess what? It is required that we have an annual review in consideration of the available impairment indicators. So think about this. There is no amortization over time. It stays at balance sheet at its original cost. Well, this group is required to have an annual review. So it's more likely that we might have an impairment because we're not changing, we're not showing any expense over time, and the carrying value is staying at its original price. So yeah, we must do this annually. And one way to do it annually, there's a couple different ways. You can do a quantitative test or a qualitative test. A qualitative test is just looking at the available impairment indicators and seeing if we need to go forward. The quantifiable is go ahead and find its fair value and do a direct comparison of carrying value to fair value. So, in summary, when to test? Every year. In this case, we had the qualitative evidence that the asset was impaired. Now we go on to the next thing, which is how we test. So we need to determine the impairment loss. In this case, it's not a two-step test. It is a one-step test. We take carrying value and we compare it to fair value. We have impairment loss of 108. We show the journal entry with the impairment loss as a debit, and we credit the asset by the amount. The renewable broadcast license then comes down to its fair value, and its ending balance now is what's going to be the new basis from going forward.